Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. And how are we doing in YouTube this morning? Okay, thanks everybody. Well, good morning and welcome to the Trader Lab. I'm your host, Tom B. Appreciate you stopping by the lab. We got a lot to talk about today. Be sure to grab a pen and a piece of paper. We're going to go over what's going on in the market today and also how using the Trader Lab processes, which is really, from my perspective, almost 45 years of trading, an advanced degree, if you might, in the mechanics of market behavior, how it works, why it does what it does, and how at times you can get in alignment with it. This is based on you integrating order flow with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to all of you in the Bookmap Discord Trader Lab community. There's no cost to visit this community. It is a group of like-minded traders who have come together to leverage their collective experience. Senior trader has over 50 years experience. I got 45, both professionally and otherwise. And there's the full range of traders from newer developing traders to seasoned traders. Many different approaches, many different processes that you can learn in the Trader Lab. But the one thing that brings everyone together is understanding that the Trader Lab and the business of trading is something that you can learn. It is not what most of us think it is. It is a gaming process. It is a statistical process. And if you're running without statistics or probabilities on your side, then you might be sitting on the wrong side of the table in the financial casino. It's up to each individual trader to decide which side of the financial equation or seat, if you will, they want to sit on. And in order to do that, you definitely need to understand what you're doing, where you're doing it. And this is not a video game. It is a business. If you're interested in the business of trading, I invite you all to come to Trader Lab. Grab that pen and a piece of paper. I got a lot to go over today. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. Okay. Important announcement. Currently, and if you haven't check this out, you are missing out big time. There is currently a funded trader webinar series going on in the Bookmap Discord server. It is in the Discord server only. It is going on through the end of this week, November 18th. Of course, you missed a couple days to the 22nd. And it's tips and tricks on how to work in a funded account environment, how you can leverage potentially leverage funded trading, what processes, what are the pitfalls, how can you use Trade Replicator, how can Bookmap help you? And that's all going on this week. But if you're interested in it, there's a link in the bottom of YouTube, gives you access to the Bookmap server. All you got to do is confirm your email address so you know you're not spam. Also, there's also something else. Let me see if I can get this working here. If you visit the Bookmap Discord Trader Lab community, there's 60 PDFs of these structured trades you can download so you can reverse engineer and build out a trade plan. The business of trading is a statistical process. Do you have an edge? Do you know where your trades show up? Do you know where the probabilities are? Now, these are actual trades I've taken and also screenshots. There's 60 of them, a lot of different market phenomena, order flow. These are live trades and others are not. But it shows you descriptions of the things that you can see and learn in the Trader Lab. I'm not going to spend any more time on it, but hey, got to give you a little idea of what this is all about. Now, let's take a look at today. Now, this red candle is today. So let's ignore that for the moment. I just didn't get around to taking a screenshot until we had already gotten rolling. But this is the last 3 days, and that's all we're interested in at the moment. Yesterday, we came down to a key support level, which is around 58.78. And you remember when we had this trend day down, then we had a breakaway gap, and this was our target on this day. Those of you who follow the stream. Then we had an inside day. Now, when you have an inside day, it kind of sets up that, a potential squeeze or breakout. Now, nobody knows, right? But this is what we know. This was too low because we found our buyers. So we have sell stops under here, this day, and we have buy stops here and here. This is what creates this. So what happened yesterday? We open, we come down, and what do we test? This level, too low. And then what happens yesterday? Squeeze. And if you followed yesterday's stream, all of this is out there. It's in the Trader Lab if you're interested. Now let me go a little further. Where were the stops? Above this high, and then we had the gap between there and there. So our potential upside target yesterday was 59.59.60. Now remember, guys, this is auction market theory. Now, what is auction market theory? How does the market work? Why does it do what it does? And what is the market? It's a pricing mechanism. Why do we even have one? Why? What's too low? What's too high? What's fair? Now, fair happens in multiple time frames as you think of them. So in this right here, now all I'm talking about is this. What was fair over these 3 days was 59.20. That's called a microcomposite volume point of control. Don't worry about the names. And volume point of control just means retail. So let's forget about the nomenclature. Let's just talk what it is. Shopping. If the price gets too high, the buyers won't pay for it. Then if the price goes on sale, the sellers won't sell it to you. And then where's the retail price where most buyers and sellers meet? In this 3 days, it's right there. Now, I'm going to take it down in time frame. One more. Yesterday's, now don't forget, we squeezed out the shorts, and write this down. The market goes up to go down, and the market goes down to go up. The market goes down to go up, and the market goes up to somewhere, don't know, to go down. Why? Stops are on both sides. What's above these highs? Buy stops. What's above these lows? Sell stops. Thanks for playing. This is when your broker sends you a gift basket. Now, let's go down in fractal. This is the main volume for this 3 days or consolidation. Took out the highs, took out the lows. Everybody got abused equally. Thanks for playing. But let's come back to this day. So we squeezed out the shorts. If the market goes up to go down, why does the market go up to go down? Because the buy stops are here. If the market comes down and gets shorts in, which is what happened yesterday, we get our shorts, and then those shorts become buyers, and everybody else who's sitting short in here and here, and the buy stops become the fuel. The market tends to go up into that area, and then we don't know. Is it going to keep going? This was our target. Now, does it get there? Part of the joy. But what now? Everybody's long. Shorts are out. Yesterday's retail price. Now, only isolating yesterday. Watch. 59.35, I think it is. 75 is the highest volume for yesterday. Yesterday's high. Yesterday's low. Now what? Now we come in to today. Is everybody tracking? Please post your questions. Oh, this could be trouble. I wanted to show you, let me just make sure. that my audio is working here. Hopefully we don't lose audio. Hello. Okay, sorry guys. This is the Bookmap Trader Lab community. And I want you to see this. Not only can you get the 60 PDFs and of course ongoing support from me and the Trader Lab, but there's a lot going on in here. You can see charts are posted, conversations, interaction, targets, structure, etc., so forth. That's that. If you're interested in being in a community of serious traders, like-minded traders, it's not romper room, that's about the business. So that's all I can say about it. If you're interested in the business of trading, this might be a good place for you to go, and there is no cost. Back. Now, here's some locations. This is the RTH open. This is that naked volume point of control. What is it? Let me show you again. You've got to put the pieces together right there. That is the naked volume point of control. So the way this tends to work is, since trading is a shopping experience, I know the following. This is where most of the volume took place. If you go to the store, think about your shopping experience, and you come here, and this is where everybody was buying S&Ps yesterday, and you go, you know, I think that's kind of expensive. I don't think I'm going to pay it. If you come here and you reject it, then where do you go? Well, you come here, and maybe you fall out the bottom. Because this is weak now. We've been pounding on it. Now the thing that a lot of retail traders think is that the fact we come down and reject it makes it a strong low. And in my opinion, not so much. I anticipate, and it's not a trade recommendation, we're going to fall out the bottom. And then it's tally-ho, as they say. You ever hear that? Tally-ho? So this is that naked volume point of control. Yesterday's high, the overnight volume point of control, which is a retail price. Now let's think logically. Let's come back. This was our target for yesterday. Remember the outside target. Look how the pieces fit together. I can't help it. I got to show you this. This was the target for yesterday, and of course, which is yesterday's here, and we didn't get there. And this is the retail for yesterday. Let's watch. Follow me closely. You may appreciate this. I do. The ETH high tests the 59.58, which was yesterday's target, which is above yesterday's high. ETH high is what? The high of the ETH session, right? Well, if we can't clear this, this is language. So you understand, this is language. I don't use indicators. I am using the shopping, the voting of the participants on what's too high, what's too low, and what's fair. This was too high, and we had left it previously. In today's ETH, we come back and we go, nah, I'm not going to pay that. And then look what happens. In the ETH, follow, this is the ETH volume point of control. It's the same as that, except it happens in the ETH. We're under yesterday's high. Hold on, I got to look at the market here. Okay. We're under this. This is retail, yesterday's high. And this is, so retail in the ETH. This is yesterday's ETH. I'm sorry, I'm trying to go too fast. RTH. I hope that makes sense. Now, if you have questions, ask them. So this sets up a couple scenarios. If the market's telling this might, remember, maybe's all you got in this, might be too high, and we open up under the ETH retail price, that might be too high. We're opening inside of yesterday's range, and we're opening at settlement, and the naked volume point of control from yesterday is right here, the retail price. So what do I know? Below retail, last time it was too high, ETH high, we already checked it. Overnight volume point of control, last retail price. Are we going to come back and check that and reject it? Or are we going to go through it, take out yesterday's high, and continue up to the upside? Great question, don't you think? We open here at yesterday's fair price. So it's either up or down from here. And I know you're going to go, well, that's brilliant, Tom. No, it's not brilliant. It's only maybe. So now we have the auction components, and we have ETH high and low, and the ETH high already tested. Remember this. This is a hint, like maybe too high, and maybe, remember, is what you got. So subject to how we operate right in here, it's either a long or a short coming out of here. But the hint is maybe all of this above me is too high, but I have no clue. So I am the clueless, not ignorant, clueless. So right here is really important. If I come out the top side, I'm going here, here, and north. If I come out the bottom side, I'm going to here, and potentially here, here. So statistically, we're looking for it potentially to come out yesterday's low, which I don't think we have done yet, and then maybe even come down further. So we'll see about that. But that's the lay of the land before we start. If you guys have questions, post them right now. I'm going to take a quick look, and then let's do the deep dive. And welcome to Trader Lab. What I'm going to be doing is showing you guys structured trades. Now, a structured trade is nothing more than a probability. And then, like everything, you wear a helmet, you protect yourself, you scale, you get risk neutral, and you follow vetted trade plan. Now, the thing to understand about a vetted trade plan, we're not in the business of predicting anything because we can't. We're in the business of statistical probabilities. So over time, the idea is if you have an edge, just like the casinos, you will extract dollars from the gamblers. Now, the challenge for us is actually doing the work to establish where the edge is. In other words, structured trades or setups, as you call them. And the other part of it is accepting the random outcome or random distribution of statistical probabilities. The casinos run a very successful enterprise working that way. They don't change the games. They don't make them up. They just play structured games that have a statistical edge that favors the house. Us, big problem. We can have all the edge in the world, but because of our emotional triggers, fear, fight, flight, revenge, lunacy that is generated by hormonal and other components, the reptilian brain, it interferes with our intention. And because of that, even if we have an edge, we can fail. So part of Trader Lab is helping you understand the business, help you determine where your trades lie. You can use those 60 PDFs that I shared. There's no cost. You can download them, and then you isolate them, and you basically bring yourself to Trader Lab community, and then the collective intelligence and leverage of that community is what helps you accelerate your potential development. And of course, past performance is not indicative of results. Your mileage may vary. Not everybody is cut out to be a trader. Not everybody can learn to manage their emotional states. And I believe I can teach almost anybody how to trade. I cannot teach individuals to do the work, and that is required. I cannot teach them to manage their emotional states. I just can't, because that's where your work comes in. But I can give you the tools, and then it's up to you to take the tools, implement them, and then learn. So without any further ado, RTH open, naked volume point of control settlement. This is like a fulcrum. It's either going to come here, because there's a high percentage probability. If this price is too low, we can check this, reject it, go down, or go through it and continue right. Remember the top of the stream. Now, let's look. So I'm looking at this. Hold on a second here. I got an alarm going off. I got to turn off an alarm. Noise. Sorry. I'm when I got trades percolating, I'm kind of multitasking. One moment, I got to move some stuff around here. Very interesting. Very interesting. One moment, guys. Be right back with you. If you have questions, please post them while I'm moving some stuff around here. Trying to take care of business. I don't initiate trades while I'm trading, streaming, but I got to trade on. I got to take care of business. How we doing there in YouTube? Please give a thumb up. A like helps the stream. There's a link in the bottom of Discord if you want to visit Trader Lab. There's no cost, and also access all the additional education in the Bookmap Discord server, stocks, options, crypto, course order flow with a high tier tool like Bookmap, and much more. So RTH open, naked volume point of control, either north or south of the border. You're going great. You're saying, Tom, I didn't need you to tell me that. Well, we're at it's like a fulcrum. It's really like a pivot as you guys think of it. So here's what we get. Market opens. Market is long. What does the market do? Market goes up to go down. Market goes down to go up. What did it do yesterday? Market went up. What did it do in the ETH? Tested the next target from yesterday, checked it, and rejected it. Warning Will Robinson moment for the longs. Now what? We can open, go up, test the overnight volume point of control, and reject it. That's a short for me. Or open, come down, and reject this, and then I'm going to here and helmet. Market goes up to go down. Market goes down to go up. Market goes up to go down. Let's watch. Now, opening swing. Now, this is a dangerous place to trade. I always tell traders, don't trade here. Many don't listen. It's because of FOMO. They don't know what FOMO is. Now you know what FOMO is. If you don't follow some advice that might be in your best interest, meet FOMO. And we have a name for that in Trader Lab, hide. So let's watch. RTH open. Up, down, up. Now I'm trying to figure out which way we're going here, and I have no clue. So I see VPOC migration. This is my first suggestion that we're going to go higher. Let's watch. Now, I'm going to label this, and you guys have followed the stream. I do something. The market is random. Please write that down. The market is random. And what is random? The rotations. 1 second. Sorry, guys, 1 moment. So if the market is random, Rod, let me know. If the market is random and uncertain, then what we need to be doing is trying to get in alignment with it using structured trades and also understanding how the auction operates. Now, I don't use any indicators. Who is and what is the indicator? I am. What am I doing? The same thing your indicators do, but I'm reading a language. Your indicator is, well, interpreting something. But the indicator cannot know context, which is all the information I gave you at the top of the stream. So right here, this yellow line is called developing volume point of control. It is the retail price. The naked volume point of controls was the high volume at the end of RTH yesterday. So when we have real-time market, this is going to track the volume and the price. So if price is moving up and volume is moving up, and it starts at 0 volume here, RTH open, as it's developing. We're moving higher. So I'm thinking we're going to go higher right here. So watch. Too low, retail, retail. So I'm looking for a long, and I break low. Right here, it's, warning, warning. I came across. So what is it saying? Remember in the ETH, I tested that naked volume point of control at the ETH high. This is the same thing in fractal. I break low. Now maybe this is too high. Let's look. VPOC migration. This says this is too high. So now I know I want to be thinking about shorts. Watch. Where is too high? Here. Watch. I test VPOC migration. Are we going up? Are we going down? Welcome to my world. I cannot predict anything. So I am waiting for a structured Trader Lab trade. And I know, but what do I know so far? I know this because I rejected it here might underline be too high. What else do I know? Order flow. Right here, I see aggressive buyers. I see buy stops going off. And as far as I know, right here, we're on our way north of the border. When I break here, it is suggesting potentially this is too high. And why did this break? Because these buyers were absorbed, the passive side. Now, we don't see the passive side. The passive side is the limit order book and whoever else is hiding their orders. Break, break. So now, new retail price. This is too high. So now, this is resistance. This is my current retail price. Two possibilities here. Continue down to this target or come across, come to mid and VWAP, which is a potential short to here, structured trade, or come back here, maybe pop the top, and then come back to there. Two structured trades. Let's see what we get. This is a potential short right here. Stop has to be above this or here, but there. The better trade is to sell this because it was too high. This would be your scale. If you sold this, you got a scale here and you're looking for this. You come back out here, trouble in River City, maybe. Watch. Where do I come? Back here. I got another alert going on. Hold on, guys. 1 second. Okay, sorry. We come back here. Test. If we don't clear this, now we might pop the stops at the opening swing high. Not unreasonable. If you got anywhere you're short, you got to have your stop above this because we can just rotate up, pick the shorts. Remember, market goes down to go up, goes up to go down. Watch. VPOC migration, either north or south of the border. Break south, another short in the Trader Lab, structured trade. And what did we test? There, too high, and the variable high volume node, too high. Where did the volume point of control shift? Exactly here. I call this a price check in aisle 3. Did you ever go to supermarket and they say price check and they send somebody running down the aisle to check the price? The market checks prices. I'm not paying that. Are you sure? No chance. I'm not paying that. Well, let's go back to where it was a better price down here. Okay. Trader Lab, short. Trader Lab, short, scale. Trader Lab, resistance, short, 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 scale. Trader Lab, next target here. This is all structured trading. Let's watch. Down you go. Now this. Now, for this, I have a lot more to show you here. This is 59.20. Let me find this. Alexander's asking me on YouTube. Thanks, Alexander. When trading the RTH open, is it better to use ETH chart or only RTH? I use both. I'm using the levels from the RTH, but the last auction is the ETH. So I'm looking at certain locations, ETH high, low, overnight volume point of control, and if there's specific structure like multiple distributions, low volume nodes, a couple of things like that. But because the volume is less in the ETH, it's not quite as meaningful to me. But the overnight volume point of control is very important because that's the last auction in the last retail price, as are the ETH high and low because of statistical probabilities. To give you an example, today, taking out the ETH high or low is a 93% probability. Taking out yesterday's high or low is about a 85% probability. Overnight VPOC, 83% probability. There's more, but that's enough. Previous point of control, which is that 70% probability. Past performance not indicative of results. You got to bet everything for yourself. Where'd this 59.20 come from? That I don't know. So let's keep going. think that's a stale level. So you're on your short. Now in Trader Lab, so you'd be short, and you could be short from here too, by the way. This is another Trader Lab structured trade. I'm trying to go fast, so what I'm doing, unfortunately, is I'm missing things. So I'm going to try to slow down. So too high. So what you have is a short there to there, a short here to there, scale, break low, pull back to there. That's another short in the Trader Lab. These are all shorts. Next target is here, and then you're holding. There. I think I got most of the initial shorts. What time is it? Because I got more shorts coming here. You'll see. This, I think this is a stale level. Trader Lab, can you please confirm that this is a orphan level that shouldn't be on here? 59.20? Or no, wait a minute. 59. I think it's stale. Trader Lab, can you just confirm there's nothing over at 59.20? I want to get it off the chart. Rod, it's valid? Yep. Okay, thanks. 59.20 is a target coming down. So it could be a scale or whatever. Or let me give you some of the ors. Trade management. Too high, selling. Microstructure, break, test. Microstructure, break, watch. To right here, resistance. I'm using fractals now. Now I'm going to show you something else. Now we get VPOC migration. This is saying everything above us is too expensive. And there's two possibilities. You'll always love the two. It goes up or down. This is, I'm only kidding. Right here, we can continue, or we go into a different mode called mean reversion. Now, this is called context. Let's watch. So, right here, this is our new retail price. The market can keep going, or do what's called mean reversion. That's rotational trade. Come outside, return here. So any trade we get from here will be a continuation short coming back to here, because this is now the mean. This is called the mean, and that's a developing volume point of control. By the way, I got to label something up here if I didn't do it. Okay, I did do it. So now this is the volume point of control. Variable high volume node. Remember, every time it moves, I mark it. Why do I mark it? I'm tracking what the shoppers think is a fair price. And remember the purpose of the market, to try to come to a consensus. So as the market is trading, they might agree here, and then if they leave it, they're going, nah, it's too expensive. And then we start this process someplace else. But when you cross over, now notice over here, we did not cross, we rejected it. Now here, what do? We don't reject it, we cross the other way. So what does that give us? The potential to come outside somewhere. And this is part of the joy. And this is called a low volume node. And all a low volume node is, and I'll show you what it is, so you know what's going on here. So what is this profile all about? All it's showing us is the distribution of volume. And price, so price does not exist in a vacuum. So this is too high. And what we have here is VWAP and mid. Now we have other structured trades showing up, maybe, and that's called mean reversion. What's the mean? Well, part of the mean, and I joke in Trader Lab, especially me, because it's been very mean to me over many years of trading, because where's the outside? In mean reversion, it is a rotational trade. In other words, the market changes from directional to potentially rotational. And so when it comes outside, you're looking, and this is now the mean, because that's the highest price. It's almost like, where's too high? Then let's come back and check. And then where's too low? And then let's come back and check. Or where's too high? And then let's just keep going. You know, part of the joy. Random. So we have VWAP and mid. Now we have a structured trade in the Trader Lab called VWAP to VPOC. Now, not to leave out the mid, The mid is also part of that. So at the moment, midpoint is right here. Also, the outside edge, which is created by this move, I'm going to draw a little something, try to draw something for you here. Let's see if I can do this. This is a distribution, and basically it's this outside down to here. There's another one that's over in here. So I've got two of them, one here, one here. And what creates it is the acceleration. We break away from the previous consolidation. I'm getting a little, I'm going into many different elements here today. So, and the whole objective here is just to help you guys get a sense of market mechanics, how you can slice and dice the market. What I do is I basically break it into components or fractals. So we broke out of here, that consolidation, and we ran. So that's a breakout. So this is the outside edge. I then broke out of this consolidation. Here's the outside edge right here. So pretty much I now have this. So I have VWAP and mid. Now we're going to look and see how far we come back. Watch. What do we do? So I'm looking for this. I break low. Remember? I break low. So I don't have a trade here because it didn't come to my location. I'm pointing this out to you so you can understand. But what did we do? 59.20, important location. If I can't get above 20, that's resistance. And I am looking out here for my next trade. But this is a key number. What happens right here, right there on the chart? Break low, come back and test. What is this? If you're in the Trader Lab, this is a high volume structure. This is a micro high volume structure. Trigger, pullback, in alignment with a higher time frame level. I know I'm making you crazy. It sets up a short or nothing. So if I'm sitting here, I'm going, because I got the mid in the VWAP. So I might see this. I'm just giving you a maybe. I'm not saying that's what I do. I'm just saying you might see it and go, what's going on? Well, this is support. This is resistance. This is resistance. But I don't know until I get this. And then I go, oh, I guess that's resistance because I'm leaning on this microstructure. This, let me show it to you. You'll find this interesting, I hope. This is why Trader Lab is what it is. Whoop, get over here. See where that green line is? That's high volume. So I'm going to just mark it in white here. So this is what this is. This is a trigger. And what this is chop, 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 consolidation, trigger. Now it just fired. Where's the test? Back here. Now, this, depending on where it is, and it is in alignment, but it may not be your trade, this is the entry. The stop will go over here, and then, but you got to go here. Okay? So this may not fit subject to your plan. If this happened out here, then you got range. So, but this is a triggering structure. Notice where we go. Here, and where do we return? Here. Are you guys tracking? I'm showing you microstructure. Are you with me? How are we doing in YouTube? You guys getting something out of this? Give a thumb up, please. Encourages me. I need encouragement. So too high. Now, remember what we were doing previously. Up here, broke, test, leg. Here, depends on your experience, but let's say you didn't, because your teeth are chattering like mine do. Break low. Watch. Short. What happened over here? short. See it? It's all the same. Outside. VPOC migration. I'm taking you back so you can see the sequence. Microstructure against the high volume structure. No clue. Very happy to tell you. Completely clueless. Because right here, I cannot tell until I see absorption, I see the icebergs, and now I have a trigger. But because I'm too close to this, I don't put this trade on. Because it could just give you one of these and then, of course, do whatever. So for me, the locations are here and here. I have no location. I have microstructure. So anyway, test. Right here, I'm watching the test because I see this. And I see other things, but I'm going to go into more advanced stuff. Hold on a second. Let me see if I got this written down for you. Yes, got some interesting stuff to show you in a couple minutes. So this, I don't have an entry here, but I have a structure here. When I come up to the micro high volume structure, and this is a trigger, don't forget, and I don't get over it, now I'm getting more confidence, and now I'm looking for my next structured trade. It's right there. So this puts the short out, and I'm looking for the leg. There it is. This is structured trading. This is TraderLab. Now what? Yeah, great question. Now what? So where am I going? Where's my next target? Remember, where did this come from? And then we have yesterday's low. So probabilities suggest this and this. Where is it? Let's come back. Follow the yellow brick road. Let's come back. Where am I trying to go? Yesterday's low, under here, and this is not a strong low. So I'm looking, and this is not a recommendation, of course, to take this out. And if I take this out, then things can get very interesting down here. Or we may only come under it, because don't forget, there's stops. Why does the market go up to go down? The market goes down to go, and it went down yesterday, to go up and squeeze out and take the stops here. Buy stops, buy stops. And then in the ETH, we tested this, the ETH high. Follow the logic. We open here. The overnight volume point of control is above us. Yesterday's high is above us. And we failed here. So I can either go up, keep going, right? Or since the shorts are out, now we got the longs. And where else do we have stops? Under here. Where am I going? Not a recommendation. South of the border. Can you see the logic? Give me a yes. Give me a no. Give me, I don't know. Are you guys tracking? This is TraderLab. If you want to be in TraderLab, you're all welcome. There's no cost. This, in my opinion, is what it takes to understand how the market works. Then I don't use any indicators. What am I going to do with an indicator? What I found was this is language, okay? So if we take the indicator out, but we use language, then you become the indicator. And then you use order flow to see inside the language. You put the pieces together, and then you know there's certain behaviors that do repeat in the market that you can quantify and qualify in a trade plan. So while I can't take this short right here, it is a short, I can't take it because my trade plan requires range. If it came up here or up here, then I can take it back to here. But I can't execute, like here, I put a limit order, maybe here, stops out here. Where am I going? I can't go anywhere. Break here, now short. Boom. So let's keep going. So now it's trade management. And there's more. Now, mid and VWAP here. I think I just missed something. Hold on. There's another trade here that's advanced I want to share with you guys. 5906. Yeah, let me show you this. The reason I got to show it to you is I took it. So now we have a statistic, thanks to Enrod in TraderLab shared this with us. And it's called the IB30. It's the first 30 minutes of trade. And the IB30, subject to, and it's kind of advanced in how you might use it. So I'm just going to talk about it because if we have the IB30, if we take it out, that's the first hour's low or high, but let's just say low. That's the initial balance, 30-minute. Then there's a high probability we'll take out the first hour's low, which is called the IB60. But I want to show you the IB30. So let me try to find this, get all this together. Looking for a trade here if I can find it. 906. I think it's this. Harder to find it here than I thought it would be. It's this. This resting liquidity. Now, this is an algo. You see how this all chops around? This is sitting in the book. That's resting liquidity. Now, I'm not going to, I could show you this much clearer on Bookmap Lite because it filters this algo out, but I don't want to, it'll mess everything up. Right here, this is resting liquidity. Now, this is advanced, what I'm going to show you. I took a short here, but I want you to see it. So I have at 9 a.m., I took out the first half hour's low, 9 a.m. So we're in a liquidating market. So I know all I want is shorts at the moment. And I know this is resting liquidity here. I see the buyers here. I break it. Now, this sets up a trigger. And I'm operating in the IB30, which is a 9 a.m. I took it out. So now the IB30 is in play, which suggests I'm going to take out the first hour's high, which has over 90% probability. I'm sorry, high or low, 90% probability. And for me, let's go for the low. I don't know about you. So this is the location now. Let's observe this location. I think, where did I get short? 58.99? Yeah, well, right here is the location. Break up, break down. This is your trigger. Break down, trigger. I wrote down 50, I had to find my notes. At 906, 58.99. So it had to be like right here. Now, I'm pretty used to seeing this stuff, you know, so I already anticipate. When I see, part of trading is not making it up. It's saying, where's my next trade? Well, I don't know, except I look at this, and now I have a short here, don't forget. So I'm in this, and, you know, that's all fine. Gets scaled. I'm risk neutral. But then I have this. And I know I have a statistical probability of taking out the first hour's low, taking out yesterday's low, and doing the Acapulco cliff dive, okay? So I only want to be short. I am not taking any longs. Now, that's just me. You know, I'm not saying that's a good plan. I'm just saying that's my plan. So right here, break. Buyers are here. That's the icebergs. Those are the buyers. Right here, I see it lift. I have my buyers here, and I break below it. So this is my short. I put another short on here, get risk neutral. So right here is resistance, this right here. So let's watch. I get taken out. So short, wherever it was. And I'm going, now don't forget, I don't know anything, right? We don't know. So I'm going for this, which is my next target, and taking out the low. I'm going for that. That's my plan. So now what? I get squeezed out, no problem, other than how I feel emotionally about it. You know, like they ripped me off or did something. Did they really? No. So what do I got? VWAP, mid, and VPOC here. So I'm looking at this, and I'm going, well, if I come to an outside edge out here, it's called the low volume node. So I got two of them. And I'm going to show you the next trades. And I was taking these, and I'll explain so you can see. Why? What does it mean? What does it say? This is the language. And of course, these are not trade recommendations. The best you got in trading always is maybe. So these are outside edges of consolidations. That's all they are. And when you come to an outside edge, typically, if you come out here, there's going to be stops out here because it's a swing. It's created by that and this. That's high volume right there. That's resistance. This is the outside edge. You come up here, you can come down here. You come up here, you can come down here. You come up here, you can come down here. So what it is too high, too low, retail. If we come out of there, too low, too high, retail. So these are low volume areas. Okay, so let's look. So nobody knows, by the way. Remember, you're in a random environment. Right here, I'm already getting the champagne bottle on ice. Champagne for everybody in the trader lab. Well, that didn't work out. So I got taken out on a trailing stop. Not excited. What are you going to do? Life. And trading. It's all random. So right here, I'm looking. I have a low volume node here. I get through it. So that means next place. Up here, actually. Sorry. Up in here. And then there's another one here. And there's another one up here, which you know about. So as we're coming up, I know there's the following things. This is too high. Remember? Retail. I have the VWAP. I have the mid. So I'm looking here because if I come out here someplace, I can then mean revert or come back in fractals. So let's just watch. I come to the outside edge. I'm at the VWAP. So right here, I'm looking for a short here or here. And I have this. I got to show you the fractal sitting here. So you got to look left. So this is too high. Volume is here. Break low, test, and off you go. So this is rejected. So I have this. I've got mid. And I got VWAP, and I'm still stuck in a short because of my statistics. So VWAP, mid, resistance. Where did the resistance come from? There. That's how I do this. You've got to look left. So there's nothing here. I saw this. That looked like a trigger to me right there at VWAP, but my resistance is here. So if I'm putting a trade on here, I have to have my stop out here. No bueno for me. And then here, now if I did take this trade, let's just assume I did take it. Let's just, oh, that looks good. There's a trigger. There's the volume. There's the test. Where's my stop? How do I put this trade on? Right there with a stop there. If I get taken, and let's say I put the trade on, take a stop. That's as nasty as it gets. But what I know is, based on the process I use, this is what's too high. And I don't know, of course, anything. I can claim that because it's random. I come to my location. I have selling iceberg. I see the buy stops. I see the delta. As far as I know, it's going up. What happens here? Seller. What happens here? Test. Break. Short. This is all a short. So for me, this is a short. I took a short here. And watch. Pull back to VWAP. So I'm holding my short and I'm looking for it to take the low of the day out. Isn't that nice? VPOC migration. Right here, the teeth start chattering. This is saying everything above is too high, and this is a new retail price. What do I want to see happen? You know this already. Down. What does it do? It pops up. So right here, not thrilled, because this is what it might set up. Outside rotation and rotational trade. Rotational trade. So I come up. Now at this point, what I do, and I'm not saying this is a good thing to do, I scale so my stop at worst is I'm going to break even on a trade, scratch. When I'm down here, I'm in the money, and that's all lovely. But then I come across here. Now, the problem with this is right here, I can come back to VWAP. I can do anything, right? I'm kind of in no man's land. Here's my microstructure. I'm going to label it so we can keep track of these things. Let's watch. And I do this. Now, I do it just by looking. But for the purpose of this stream, I'm going to just put a little more form to this so you can kind of see what's going on. So this is a micro consolidation, break low, break out. That's a trigger, pull back to this edge. So if you were getting short against this, your stop has to be above that. I always give it 2 to 3 ticks. Let's go in a little more micro. Micro consolidation right there. Break low, back to the micro structure. Too high. There. Microstructure here. Break. Back to the bottom of the consolidation. Too high. Break. Microstructure here. Break. Back to the volume. Micro volume here. Break. Back to the volume. Hope you're getting something out of this. I'm just taking a little pause to refresh, right? VPOC migration. Now, watch. What was too high? This. Now, this can present a problem. Again, watch. Break low. Outside edge. High volume is there. Now, when I show you these fractals, it's up to each trader to determine, based on statistics, do you want to micromanage? You'll get taken out. Do you want to stay back a couple of rotations? You'll still get taken out, but you give it the room. And this is where your work is in this business, is determine what works over a large sample size. Too high, too high, too high, too high, too high, too high, too high. VPOC migration, variable high volume node. How am I doing on the clock? Running out of time. Please post your questions. And I'll come up and take a look. VPOC migration. Now, what's this? Too low? Don't know. By the way, does anybody know? Nope. Do I know? Absolutely not. Do I need to know? I can't know. Write this down. Everything, every moment there's two things. One, it's completely uncertain. So you can't predict anything. And our nature is to try to predict everything because we seek certainty, but we're in an environment where it doesn't exist. Isn't that interesting? So if you can't have certainty, what do you have? Randomness. If you have randomness, how do we solve the puzzle? With statistics, not with prediction. Most traders are risk adverse naturally, Oh, saber-toothed tiger, we're going the other way. So we're not wired to operate in an uncertain environment. That's uncertain every moment. So we seek certainty, and it doesn't exist here. So the casinos have no certainty. So all of this is a squeeze. So nothing I can do about this, not my job. I get taken out on a trailing stop. That's that. That'd be the end. That's what you heard, alarms and everything going off here. It was like, oh, that's cute. Now what? Well, I still have my statistics open down below. So and that doesn't mean it'll get there. Remember, there's no prediction. So I'm coming across all my levels, and I haven't seen any of this. Let's see what we have. Remember 20? I haven't seen this, so I'm just looking at it. 20 is an area to get short. It was a target coming down. Remember, we broke below it. It was a short on the way down. What do? We squeeze. Where do we come? Here. Let's look at the micro high volume structure. Now, this is a location. Now, the market can do anything. What do I see here? First of all, think real estate. Location, location, location. Microstructure. No clue. Remember, clueless. Look to the right. Look where I am. So this, now you're going to see this all over the place. Why am I not just selling it, selling it, selling it? Because I don't have a location until I get here. So I come up here, and as far as I know, it's going to keep going. Let's just be real. Nobody knows anything. But what I observe here is 137 stops, buyers, going to the moon, Alice, selling iceberg, so what? Break. And now what happens here? These buyers are under the bus. I see a seller, and this is my microstructure. And I'm still going, I don't know, because there's support. See? Support, break high. That's your support. Going to the moon. What happens here? Break low. Support. Test. Too high. Too low. Too high. Break. This is a trigger. And now location, location, location. Let's watch it. Test. So this is my outside edge. Potential short. And if you, so your trade would be, here's the choices. You put it a limit order here with a stop 3 ticks over here. You put a limit order there with a stop 3 ticks over there. And then either you get stopped out or you get risk neutral, which would be here. So short there, stop there, short there, stop there, scale here. And then you're hopefully back in the path. Structured trade, Trader Lab, a little advanced, but it's all in the pieces. And then where are you trying to go? This. So this trade is to here. In a fractal, you're just going there to get risk neutral. This is the volume point of control. What is this called, Trader Lab? Trader Lab, what is this? How about YouTube? Give a guess. What is this called? What is this behavior? Mean reversion. Thank you, Sam. Thank you, Moonwalker. Mean reversion. Trader Lab, this is what you need to know. Not what will happen, but when the context or the condition of the market changes, like it did here, and I come to an intermediate time frame level. Remember, I'm integrating. Did you guys think time frames? I don't. But levels, and they're all on the chart. If I'm below this, why are we below this level, which is a key high volume level in intermediate time frame? Because it's too high. What does the market do in all fractals and time frames? It checks pricing. We're shoppers. Traders are shoppers, not indicator bound individuals. Shopping. If I come up to a level, so I know in my plan, not what will happen. That gave up on that many years ago. I know what might happen. And I know the levels based on the auction or what the participants voted on. If we come to a store, and this is like the big box store, not the little one down the street, and then we are in now the little store down the street. So we're in the big store and the little store at the same time. This is like the concession counter inside the big store. Intermediate time frame, big store. Little time frame, microstructure, the deli counter. You guys know what a deli is, right? If this is too high and that in a higher time frame is too high, I have alignment. If I get my seller, I now have a trigger. Look at the difference in behavior. Up, up, up. Where's my sellers? Up, up, change. Trigger. Now, where's my resistance? You see how I'm doing this? And I'm in alignment. Now, let's go to the next piece. The volume point of control is sitting over here. This is called mean reversion. I'm coming to this mean in a high time frame, and in a developing time frame, this is the mean. So if I counter rotate to a higher time frame price that's been rejected, and I get a trigger, then the possibility is to come back to the developing daily time frame. They're all the same. This up move is mean reversion in a high time frame, and the short from here back to VPOC is a mean reversion in a developing time frame. Now, if I haven't lost you, Give yourself a gold star on the forehead. If I have lost you, come to Trader Lab. You can learn this. It's an interpretation of market mechanics in the auction. And since I don't use indicators, what is my indicator? My indicator is the participant behavior, nothing more. Indicators are conflicted, inconsistent, and most retail traders think if you throw the kitchen sink or a lot of spaghetti, and that's what it is, spaghetti, some will stick to the wall. It's all because we need certainty, and if you use the term confirmation, what does that mean? I don't want to lose. I'm looking for certainty, and I have to share with you, it doesn't exist here. So if you throw out the idea of certainty and train yourself to operate in an environment of uncertainty, you are now emulating the business model of a successful casino, which is complete uncertainty. They don't know the cards coming out of the deck, how the gamblers play the cards. They know nothing, but they play the games the same way. And because they only play games that have a statistical edge, just like us with structured trades and Trader Lab, if you have the edge and you've extracted the edge, you know what it is, you have the discipline to put it on, you accept it's uncertain, you have no control over anything except yourself. And if you have the edge and you can control yourself, which means manage your fear, how do you do that? Statistics, not more indicators. Again, just an opinion. Might be different for you, and if so, come to Trader Lab, clue us in. Really. I'm not saying this is the only way to trade. What I'm saying is what most retail traders do is not a path to consistency, which turns you into a gambler. And we all have winning trades, even with nothing. Push buy, push sell, do nothing else, you'll have winning trades. And what most of us do, and I've done, and so have you, is you see winners, you see a string, and all you got to do is make it better. But it has nothing to do with consistency in actually building a business. It's more like a video game. And unfortunately, that's not sustainable if you're interested in the business. So this is the target from up here. That's a good trade. I'm okay with that. How about you? Back to here, mean reversion. Now, the next possibility is continue or you get taken out. That's it. There you are. So this is now support. And statistically, now the market never has to do anything, but statistically, I'm looking for this. Not a recommendation. It could do the opposite. As long as I'm below here and I can stay. Now, this is a low volume node. Here's what can happen here. We can come out here. Of course, we could do anything. Or if we come out the top, then everybody gets fooled, and then we squeeze and we'd come out here. For me, it's only shorts, not a recommendation. Why? Because that's the trend. And I got a weak low below. I got to mark one other thing here. I'm going to make sure it's marked. This is support. Resistance is around here, a piece of resistance. Let's watch this high volume here for reaction right there. And this swing high has stops above it. So you got to be aware of that. The outside edge is up here. So these are locations. Remember, this was the last short. This is an outside edge. I'm going to remove some of this debris, not relevant now. And now I'm going to look at your questions. Thanks so much for your patience. Truly appreciate it. Went as fast as I could today. And post your questions. I'm going to come up and look. And in the meantime, I want to remind you guys that there's a special series on funded traders. It's all this week, Discord only. If you want to attend these, they're available to everyone at no cost. You do need to register and actually confirm your username and email for Discord. There's a link in the bottom of YouTube. You can also access the Bookmap Discord Trader Lab community. Download 60 PDFs of these structured trades that I'm sharing with you here. These have been done a number of years ago. I'm not a vendor. There's no cost. And there's a library of webinars and, of course, the Bookmap Discord Trader Lab community, all available at no cost. And you just use the link in the bottom of YouTube if you are inclined. This is what the Trader Lab looks like. It's ongoing, and there's a lot happening in there. A lot of mutual support and much more. So You can access the Trader Lab. Use the link in the bottom of YouTube. There is no cost. And the Trader Lab, by the way, it's about the business of trading. So, it's not like many chat rooms are, I guess. And since there's no cost, I would say that the participants are very serious and very supportive. And you got to be in a community, I think. There's just too much work to do. And one thing and I've been doing this 45 years, I have also been in some of those chats, and I haven't in many, many years, but I have no patience for nonsense. I'm in business. And if you want to be in business, I think you have to kind of take a certain approach. You want to be supported. We need support because this is an isolated business. It's like being under a rock. I know when I talk to my wife about trading, I see the eyes roll back in the head, and it's like, what are you talking about? So that conversation doesn't happen. The only conversation I get is, how was your day? And I'm going to say, oh, it was all right. I never say it was a good day. I don't say it was a great day, because I have good days, great days, and bad days. Don't you? So I just appreciate the question. I appreciate that I have more work to do to get better. And I'm in the community of the Trader Lab so I can get better. I spent years and years and years with something I call Trader Groundhog Day, which was taking indicators and derivative indicators, building trading systems and everything else, trying to isolate and optimize, or quote, curve fit. And what I found out was, remember LVN at VHVN, got an LVN going on. Got an alert going off over here for a location. I know where this came from. So where do we come back? Variable high volume node. What it was up here? Higher time frame node for the short. What is this volume doing right here? Variable high volume node. Now, this is not a trade. This is just a curiosity, okay? I don't call trades. You don't need to take my stops. I don't want to take yours. Let's put the structure together. Here was support, broke high. This was the location, trigger, pullback, trigger, microstructure here. You got shorts here, 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 right? All this. So you guys know that. Let's go a little further. This was support. We broke it. See the support? Break. Where do I come back? To the top of that structure, which is another short. So down we go. We get our thing down. Now, I'm not going into trade management here. You could be using these structures, and this is also available in Trader Lab. It's all concept to manage, and you'll get taken out. The downside to micromanaging is you could just get a rotation and get slammed. So right here is another potential short, or subject to time frame, your stop is up here, and you're going to just lose your lunch because you're going to sit through this kind of rotation. I don't. Other traders do. We have a trader named Rod in the Trader Lab who does a really good job. And he kind of puts the trade on and gets in his Barca lounger and takes a nap. I mean, other traders are going to be more micromanaging. But, and then what is the right way to do it? How about this? Statistics. Do you know? Because otherwise, if the rotations are random and the behavior is random, then there's no way to know, because then it's all about emotional stimulus. You don't know where your stop should be. So then you need a trade management process, and it's not the big one that got away. It's all of them. What process do you use to give you the best yield over just like the casinos, over a large sample size? That's the question. How do you get that answer? Well, come to Trader Lab. Otherwise, it's just your fear and greed are being Hyde, we call it, Jekyll and Hyde. Otherwise, it's just emotional stimulus, and that makes you that sets the lunatic free. Hyde. Hyde is, oh, it's going up. No, it's going down. I better get up. Gee, I should have got out here. Oh, I'm not going to sell it now because I should still be short. Oh, no, it didn't. Right? That's Hyde. Lunatic. What's this? Too high. What's this? Microstructure here. Also too high. What happened here? So how do you do this? Variable high volume node. That's material. That's material. got above it, got to here. That's same thing. This high volume node is the same in a fractal as that. If I come and break under this, it's a short. There you go, back to this one. Target, mean reversion, and then out the bottom or whatever. If I come back here, because I broke below it now, it is resistance. So I have the potential, and this is not a trade recommendation, be looking to sell it in here. And I'm above the mid and all that and the VWAP. Anything can happen. So this is my area to be watching. And if it comes above here, I get squeezed out and take a stop like the rest of you. No magic. Let's watch. So we're looking for behavior in here. Micro high volume is here. Outside edge is there. Let's just watch. Microstructure is in here. This is key. Microstructure is here. I have the potential trigger. I'm just going to watch now, right here. Buyers are here. Exhaustion is here. I got a buyer here. This is right here is kind of critical for this structure. Let's just watch it. And this is my resistance. We'll just keep an eye on it. Okay? Remember, I don't call trades. You don't need my stops. And I'm going to look up at your questions while we're waiting on this thing. So, potentially too high, break low. I got buy stops here, and I got this level. So this is my level to observe. This is my microstructure. So I'm right in here because I have a potential trigger right there. Now, this was a potential trigger. See? So you might take a stop there. What I like to do, and it's not a recommendation, is I kind of like to use a scalpel. So, because I'll probe the market. I kind of look at it. It's not about right or wrong. It's like, am I at a location? And if I'm below this, which was a short, and I come back up, well, obviously I can come through and take this out and just squeeze the, out of everybody. Or right here, because of that, which is a fractal of that, it might be a short. So we're going to see it. I'm going to look at your questions. How are we doing in YouTube? Guys, please give a thumb up if you're visiting in YouTube. And if you like what you see, leave some comments. I like to read your comments. Let me know, how this is working for you, what you get out of it. I can't call trades because I take stops. Why do you want mine? But what I can do is help you understand how the market works. Now, let's assume I did take a short here. Let's be real. If I'm looking at this is the level, right? So if I take a short here, I got to be a couple ticks above this. And I'll get stopped out, okay? I'm okay with that. I have to be okay with it. So let's watch. So this trade, now we got this up here. And this. The next level is here. Let's see what else is going on here. Outside edge. So nothing for me at the moment. If I did take a short, if I took one here, this is where it kind of breaks, then no good. Then you got this. So I got nothing now. Okay. I'm still going to watch these areas. 151 buy stops. By the way, if you're visiting in YouTube, there is a link down there. If you're interested, there's a funded trader webinar series going on for the rest of the week. You can access that. You just need to click the link in the bottom of YouTube. We're watching this area here. I'm still at my area. There's no precision in trading. I got to tell you, it's one of the things, remember, it's all random. If we break below here, it still might be a viable short. So we got to see. This is still the location. Nope, nothing yet. So nothing to do. So this was my outside location. My next location's back here, and there's going to be stops at the swing. Now, if I break below this and then check it, then it might mean something else. But right now I don't have that. Let me just show you this for the funded trader. Discord only. You know, if you're interested in funded trader programs, how to work within their rules set, processes, maybe to trade them in order to become to pass their evaluations, I think it could be pretty cool. If you're interested in the Bookmap Discord Trader Lab community, you can access that. You can access the community. There's a link in the bottom of YouTube, no cost. Download the 60 PDFs of structured trades. These are what I'm sharing with you here in the stream. And a lot of circles, arrows, and descriptions. You can have that, no cost. There's also a library of webinars and the Bookmap Discord Trader Lab community. All that's available to you at no cost. So you might have some interest. Final questions. I'm running out of time. I got about 8 minutes. Please throw them in the hopper. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants who reverse engineer, screenshot, circles, arrows, build up your portfolio of structured trades. Okay, we're watching this location. I have nothing here at the moment. Notice where resistance can become support. Where'd it come from? This. We got to watch this location carefully right here. Not a recommendation. I got microstructure here, right there. So this potential short. See where it came? Cheap shot, right? There's another trigger. So what we had was, wherever it was, we were looking here. We tested this. There's no precision. That's why I use tight stops. I have a trigger here. This is support. This is now resistance. I break low. You could be entering here, maybe even here, but your stop's got to be up here. By the way, trading is not easy. But when I have structure, then I can get in at different locations. The ideal location for this was here. Well, let's assume once you break here, now you're going to be looking here. So if we rotate here, but your risk is up here. So if you have no way in, then you don't have a trade. Would have been nice if we could have got it though, right from here. I think it was there, wherever it was. So you can kind of see how the process might work. And we all take stops. Now, one of the reasons, now I take stops all day for the same reason you're seeing here. But what I have found, and I'm only talking about me, is I trade these large rotations. So I can afford to probe the market. And that's kind of how I look at it. And then I'm coming back here. And the goal is to come out the bottom. Does that make sense? How we do it in YouTube? I got 5 minutes. Got any final questions? Throw them in there. Or if I can't get back to them, come to the Bookmap Discord Trader Lab community. Use the link in the bottom of YouTube. There's no cost. And you can take advantage of the 60 PDFs of structured trades, the exclusive library of webinars for Trader Lab participants. I suggest you start with the primer webinar. It gives you a high-level overview of this process, what it's built on. I've been trading using this process and no indicators for a long time. Maybe 15, 18 years, I don't know. Total trading about 45 years, both professionally and otherwise. I've learned a lot along the way, and I've also done everything you guys done. The difference is I've done it for longer because I had no access. There was no information. Bought a book, went to a seminar. That's it. We didn't have PCs. We didn't have an internet. We had nada. So information is very hard. Now, you guys have the other problem. There's information all over the place. Anybody can throw out a piece of information and suggest they're an expert at something. Yeah, I'll never claim I'm an expert. I'm a developing trader. You'll always be a developing trader. You're in a random environment. There is no precision. The idea that, getting short, I think it was here, wherever it was, stop here, getting taken out. I have to put the short back on again here. You see, that's the way I do it. Now, I'm not saying you want to do it that way, but if or you put a trade on, this trade would fail above here. We were referencing this. I don't put a 10, 12 point stop on. I like to keep my stops 2 points, 3, pretty much the outside. And I can handle that, with the number of contracts I trade. But I'm not putting my stop out here. So if I get popped like this, then I'm just going to, when I see this, I have choices. I can put my trade on here. If I'm fast enough, I'd be putting it on here. As soon as I come under here, I'd be hitting it, and then my stop is up here. Then I'm coming back here. Actually here, really. But to mid and VWAP, where I might get buyers, mid, VWAP. So if I get short, I've got to get scaled because I anticipate retail buyers at the mid and the VWAP. Now, they are mechanical. Are you mechanical? Do you just buy the VWAP every time it comes there, or buy the mid, sell the mid mechanically? Well, that's what most retail traders do. And the statistics for longevity for retail traders, not so good. So maybe it's more about understanding not only retail trader behavior, but structure and market mechanics, which will give you a suggestion why I'm going here and under here. So that's where I keep trading towards. No longs for me, just shorts. The only long, quote, would be a cover of a short. So if I have a buy trigger or a location for a long, I don't take them. I just take shorts. That's just me. You can be trading from both sides in any fractal or time frame. Please give that thumb up in YouTube. Hope you guys got something out of this. Any advice on not moving your stops? Yeah, Campbell, that's more than a simple answer. Why don't you come to Trader Lab? Because that's psychology and fear, which is normal, by the way. We all feel it. It's what you do about it. Use the link in the bottom of YouTube. And anyone who's interested there, if you're in YouTube, click the link in the bottom of YouTube for the Discord Trader Lab. You just have to confirm your email. You won't be solicited. There's no cost. Visit the community because we're all working on the same stuff. That is common. Psychological impediments are common. You need to understand your wiring, and it's not simple. I think anyone who comes to Trader Lab, if they do the work, can learn how to trade. That's my personal belief. It doesn't mean it'll apply to anybody. But if you learn how to trade and you have to put the work in, then it's a matter of understanding emotional triggers and how they disrupt your intentionality. Just because you intend to do something has nothing to do with your ability to do it, because the emotions and the hormones and the chemicals in the brain overwhelm all your intent. If you want to understand a better way to potentially get control of that, so you're in control, not your fight and flight, come to Trader Lab. There's a lot to learn. And if you're interested in the business of trading and maybe developing a longevity and a career path, that's what Trader Lab is built on. Thanks for visiting the Trader Lab, guys. Hope you got something out of it today. Please leave a like in YouTube, subscribe to the channel, and I look forward to seeing you soon. Don't forget to give a like on the way out. And as for everybody else, I'll meet you in the Trader Lab. Have a great day.